My friend Rachel, she's 29, works as a marketing analyst for a Fortune 500 company, sent me a screenshot last Tuesday that made my stomach drop. It was her job description. The exact same tasks she'd been doing for 3 years. Except now, an AI tool could do 80% of her work in about 6 minutes. She wasn't panicking about getting fired. She was panicking about something much worse. The realization that her most valuable skill, data analysis, had just become a commodity overnight, like watching your college degree turn into a paperweight in real time. Here's the thing. I've been watching this unfold for 2 years now. Not from the sidelines, I lived through my own version of this nightmare. Back in 2018, I thought I was bulletproof. I'd spent 8 years building expertise in financial modeling. I could build a 3-statement model faster than most people could open Excel. I was earning $95,000 a year and felt untouchable. Then, GPT-4 launched. Within 3 months, I watched a summer intern use ChatGPT to build models that would have taken me 2 days. She finished them in 43 minutes, and they were better than mine. That's when it hit me. I wasn't competing with other analysts anymore. I was competing with software that never slept, never asked for raises, and got smarter every single day. Wild, right? But here's where the story gets interesting. While I was having my existential crisis, something else was happening. The companies building these AI tools, OpenAI, NVIDIA, Microsoft, their stock prices were going absolutely insane. OpenAI's valuation jumped from $29 billion to $157 billion in 18 months. NVIDIA hit $1 trillion market cap. Microsoft added $500 billion in value. Think about that for a second. The same technology that was making my skills worthless was creating unprecedented wealth for the people who owned it. And that's when the light bulb went off. I was thinking about this completely backwards. I was trying to outrun the robot, but the real question wasn't how to compete with AI. It was how to own a piece of the companies building it. Let me tell you about Tom Chen. He's a radiologist at Johns Hopkins. 42 years old, makes $340,000 a year reading X-rays and MRIs. 3 years ago, an AI system called GPT-V4 started diagnosing certain conditions more accurately than human doctors. Tom's first instinct was to panic. His specialty was under attack. But Tom did something different. Instead of fighting the technology, he started buying shares in the companies developing medical AI. Palantir, which builds data platforms for hospitals. Google, which owns DeepMind's health division. Even small biotech firms working on AI diagnostics. Over the last 2 years, while his colleagues worried about job security, Tom's investment portfolio grew by 180%. His AI investments now generate $38,000 per year in passive income. He still works as a radiologist, but he's not dependent on it anymore. Now, what most people don't realize is that we're living through the biggest wealth transfer in human history. And it's not happening slowly. It's happening right now. Every time you use ChatGPT, you're sending money to Microsoft. Every time you search on Google, you're funding their AI research. Every time you shop on Amazon, you're paying for their machine learning algorithms. You're literally funding the technology that's replacing human labor and getting zero ownership in return. The average American sends about $2,400 per year to tech companies through subscriptions, services, and products. That's $2,400 flowing from wages to capital owners every single year. But here's the part nobody talks about. You can switch sides. I learned this the hard way. After my modeling skills became obsolete, I had a choice. I could spend 2 years learning prompt engineering and hope to stay relevant, or I could take the $8,000 I had sitting in savings and buy ownership stakes in the companies building the future. I chose ownership. I bought Microsoft at $180 per share, Google at $95, even some smaller AI companies I'd researched. Not because I understood their technology, I barely knew how LLMs worked, but because I understood something simpler. These companies were collecting rent from every business that wanted to use AI. And rent is the most powerful form of capital in existence. 18 months later, those positions are worth $23,000. That's a 187% return, while my old job was being automated away. And I mean that literally. Look, I'm not saying this to brag. I'm sharing this because I almost missed it entirely. I was so focused on protecting my job that I nearly ignored the bigger opportunity. The AI revolution isn't just changing what work looks like, it's changing who owns the value that work creates. And most people are on the wrong side of that equation, right? Here's what I wish someone had told me 3 years ago. The goal isn't to AI-proof your career. The goal is to own AI-powered businesses before everyone else figures this out. Because once this shift becomes obvious to mainstream investors, the opportunity disappears. When CNBC starts running segments about AI investing for beginners, you're already too late. We're still in the early phase. Most people are worried about their jobs. Smart money is buying ownership stakes while they're still affordable. Okay, so why does this matter for you? Let's say you earn $60,000 per year. After taxes and expenses, you might have $300 per month to invest. That feels like nothing, right? But compound that $300 monthly into AI-focused index funds or individual stocks for 10 years, assuming even conservative 12% annual returns, and you're looking at $69,000. That's not retirement money, but it's something much more valuable. It's proof of concept. Proof that you can generate wealth without trading your time for money. Proof that you can switch from being a worker to being an owner. And once you see that transition work, even in small amounts, everything changes. You start thinking differently about money, about work, about what's actually possible. Now, if you're someone who earns a steady paycheck but feels like you're running on a treadmill, working harder every year but not getting ahead, this is probably for you. You're not behind. You're just playing the wrong game. The old game was about making yourself indispensable at work. The new game is about making yourself dispensable by owning assets that work without you. The AI economy isn't coming, it's here. And the wealth it creates is going to flow to owners, not workers. Tonight, before you go to bed, open your brokerage app and buy one share of something AI-related. Microsoft, Google, an AI ETF. Doesn't matter what. Just cross that line from consumer to owner. That's it. That's the whole move. Because while everyone else is trying to compete with robots, you'll be collecting the profits they generate.